How to make millions from giant inflation ahead for beginners. Inflation. Few words strike up as much fear into the hearts of investors as this word does for young investors. It sounds like a scary myth that's used to warn young children on Wall Street. But the veteran investors who lived through the rough days know just how dangerous monster inflation can be, with people like Warren Buffett, Bill Ackman, and Charlie Munger warning of an impending high inflation market. It's time that we take a deeper dive into what exactly we can do to prepare ourselves. Hello everyone and welcome to Money Invest. Join our channel by hitting subscribe and clicking the bell icon to be updated on our new uploads. Without further ado, we'll introduce you to a highly influential businessman. According to the Bureau of Statistics, the annual inflation rate in the US surges to 6.2% in October of 2021, the highest since November of 1990 and above forecasts of 5.8%. This situation is not ideal as investors can successfully grow funds in that period since the duo of taxes and inflation gobbles up everything. When the best investors sound warning bells, we have no choice but to listen and try to learn what we can. It's in that spirit that I've made this video in a bid to help beginners to know how to profit from the oncoming inflation wave. So let's get right into it. Ways to generate millions during inflation period by stocks. When prices began accelerating earlier this year, some experts, including the Oracle of Omaha, sounded the alarm. We are seeing substantial inflation, Warren Buffett told attendees at his Berkshire Hathaway Company's annual shareholders meeting in May. We are raising prices. People are raising prices to us, and it's being accepted. Stocks throughout history have proved to be one of, if not the best, outright investment class. When we're talking about high inflationary periods, stocks remain a top investment to consider. But the question arises, what kind of stocks to pick during inflation? The methodology that you use when picking stocks in an inflation-plagued period differs a little bit from regular times. Not all stocks are good stocks for high inflation periods, but using this selection criterion, we can get the best inflation-resistant stocks in your portfolio. To not only insulate you, but give you millions to boot, let's get right into the criteria. Invest in companies that require low capital to maintain earnings and grow operations. The stocks in your portfolio must be stocks that require low capital to maintain operations and earnings growth. These include the likes of personal favorites of investor, Michael Burry, Kraft Heinz, Facebook, and Google. Consumer staples and tech companies typically require less upfront capital to run their systems. Warren Buffett links investing in such businesses to foolish acts like someone running upward on a downward moving escalator. Google, a tech company, on the other hand, barely needs to hike any service prices up, and hence they do not lose their customer base and their stock price stays solid. This is why it's essential to be on the lookout for businesses that require low capital costs to maintain operations and growth investment in companies with high pricing power. When I say invest in a business with high pricing power, it means that you should invest in a company with a long consumer base that will stay loyal even if the business increases its cost. There are pros and cons to every type of investment hedge, just as there are pros and cons with every type of investment. The primary benefit of investing during inflation, of course, is to preserve your portfolio's buying power. The second reason is that you want to keep your nest egg growing. It can also lead you to diversify, which is always worth considering. Spreading the risk across a variety of holdings is a time-honored method of portfolio construction that is as acceptable to inflation-fighting strategies as it is to asset growth strategies. However, the inflation trail should never wag the investment dog. If you have specific goals or timetables for your investment plan, don't swerve from them. As an example, don't weigh your portfolio too heavily with tips if it requires significant capital appreciation. Also, don't buy long-term growth stocks if your need for retirement income is imminent. An obsession with inflation should never get you out of your risk tolerance comfort zone. There are no guarantees, traditional inflation hedges don't always work, and unique economic conditions sometimes deliver excellent results to surprising assets while leaving what seems to be sure winners trailing in the dust. So your dollar is getting devalued and watered down. So people start rushing to other forms of currency. One of them is Bitcoin. Now, this is no guarantee, we don't have any history to prove this, but I think there's a big chance of Bitcoin taking off. If we hit hyperinflation, so we've got real estate, we've got gold, we've got Bitcoin. These assets will do well in inflationary environments. The other thing that you need to be aware of is that the stocks that perform here and the ones that don't. Now to show you this, we're going to go to the example of the greatest investor of all time, Warren Buffett. He's talked a lot about stocks and inflation in the past. Especially when it comes to high inflationary times, you need to focus on stocks that have three key things you might want to write down. So one of the ability to generate rather than consume cash to comprises that can increase prices easily along with inflation. And 3 is to buy companies that can accommodate large dollar volume increases in business with only minor additional investments of capital. You know, even a stock in Coca-Cola, Buffett's longtime investments, should fare better than most in inflationary times. They can raise their prices and inflation increases. And some companies generate a lot of cash flow, or stock like Sanderson Farm. They can easily raise the prices of chicken along with inflation, and they can keep January 18 high amounts of cash flow. So it's these types of stocks you'd want to favor more, and if we are to see high inflation in the future. So don't get me wrong, when inflation is high, it can be a wretched time when it comes to your finances. As Thomas Sowell said, "We value your enthusiasm, so don't forget to subscribe to the Money Invest YouTube channel and ring the bell to be informed on new episodes. And keep watching." Here are the top 5 strategies to help you worry less about the impact on your finances or even help you come out ahead while inflation flares. Number 1, increase your earnings power. When inflation flares up, you can think of it in 2 basic ways. One is that the prices are increasing, and another is that the dollar is losing value. Either way you look at it, earning more money is a pretty safe solution. If you're out of work, or one of the millions of people leaving their jobs in the Great Resignation, consider using whatever extra downtime you have to develop your skill set and position yourself for a bigger paycheck. Number 2, play the stock market. Stocks have historically outperformed inflation to a significant degree, making them one of the strongest hedges against high-flying prices. You can use inflation to your advantage by investing in sectors of the economy that may benefit from rising prices, including food, technology, building material, and energy. Number 3, capitalize on the scorching real estate market. Real estate has proven to be one of the most reliable long-term investment plays you can make. The US housing market has been on a serious upward trajectory in recent years. If you're ready to buy your first home or already own a home and you want to trade up, compare mortgage offers to find your best rate. Mortgage rates are still historically low. The average 30-year house loan recently fell below 3% again. The lowest mortgage rates tend to go to the borrowers with the highest credit scores. So do what you can to raise your credit score a few notches. Number 4, cut your debt. If you're carrying significant debt, but a mortgage, refi, or rate swap isn't suitable for you, there are still other options to reduce your interest you're paying creditors. One proven method for slashing the cost of your debt is to take out a lower interest debt consolidation loan. By rolling all your high interest debt into a single loan, it'll be much easier to budget around a single payment to one lender rather than several. Number 5, stay the course. Not everyone believes inflation's recent spike is a sign of long-term problems. Warren Buffett has noted that Americans still have money to spend. So if you're comfortable enough with your current finances to absorb the higher prices, you may want to ignore the hype and generate some extra income in the stock market without much effort by using a popular app that helps you invest your spare change. And now we've reached the end of the video, but wait, make sure to leave a like and subscribe so you can join the Money Invest Squad and be a part of the channel. Thanks for watching this video.